Good morning, everyone. Welcome to this expo. My name is Habib Akiki. I'm the COO of Tradepedia and the senior market strategist of XM Arabia, XM MENA. I'm gonna continue talking about a similar subject as the one our colleague Nicholas from Saxo Bank was discussing. But now we are more focused here on technical analysis. Our subject for today is automation of price action. So what we are basically going to discuss is technical analysis, price action, reversal candles, and automation through the gray box that Nicholas first discussed. Before we start, what gives me the right to talk to you about technical analysis is that I'm a certified technical analyst from the International Federation of Technical Analysts. I have a bachelor's degree in banking and finance and a master's degree in financial management from SDA Bocconi in Milan, Italy, and over 16 years of experience working with top-tier firms in the region, and of course, actually trading the international financial markets. So to start, who uses technical analysis? Anyone here? All right, excellent. We have around 20% of the audience revealed that they are using technical analysis. Now, going back to the basics and to the definition of technical analysis, what is technical analysis? It is the study of the market action, basically price movement, through the use of charts for the purpose of forecasting future price trends. And this is very important. The definition is always very important because it's the foundation. Now, throughout my years of experience, I have trained over 30,000 traders. And I noticed that a lot of things we learn on our own, we learn them the wrong way. A lot of technical analysts or traders who learn about technical analysis tend to focus a lot on indicators, and they tend to disregard the most important indicator, which is price. So that is why I chose this topic, and that is why at Tradepedia we worked with our developers to automate what I will show you today, the reversal candle indicator. So the Avramis automated reversal candle indicator, focusing on the most important indicator, the live indicator we can all have access to, but we tend to disregard. So technical analysis is the study of the price movement. Now, there are several ways basically to display the price action on a chart. There are three main ways to illustrate the price action on a chart. We have the most basic form, which is the line chart. This is a very basic form of illustrating price action. Whenever you are watching Bloomberg or CNBC or any economic channel, you will notice that when they are discussing a stock or a security, they will show the price movement through a line chart. This line chart is simple, it serves the purpose, it gives us an idea about the price route, but it also hides a lot of valuable information because it is only based on the closing prices. Now, a better way of illustrating price action is through bar charts. Bar charts is nice, but it's not appealing. The best way to analyze price action is through Japanese candlesticks. This is the best charting technique, let's say, according to me. It provides all the important price elements, open, close, high, and low, and it is visually appealing, more than the bar charts. Now, candlestick analysis is very old. They started using it in Japan in the 16th century, so over 400 years ago. However, nowadays, it has been very widely used. So now people tend to use it more because it is visually appealing and it gives us a lot of information about the behavior of the traders and the market participants. Now, candlestick charting was developed by rice traders in Japan in the 16th century because they wanted to understand or try to forecast the future of rice prices. So they found a way to illustrate the price movement of rice on a piece of paper, which then became the Japanese candlestick charting technique. Now, the importance of this type of charting is that these candlesticks provide us with a lot of information and early warnings of reversal, of possible price changes. They are used by traders to help them identify trend continuations and, most importantly, trend reversals. Now, when we are studying or when we are analyzing candlesticks or price movement through candlestick, it is very important to understand the anatomy of the candlestick. Now, when we are analyzing candlesticks, we have to focus on three important elements. The most important element is the color of the candle. The color of the candle reveals to us in this specific time period who had control over the prices. Who was in control? The buyers or the sellers? Now, candlesticks, basically you can give them two colors. One color representing upward price movement and another color representing downward price movement, known as bullish and bearish. The color of the body is important because it reveals to us the winner, who is in control. Now, every candle is a time period, and this time period is actually a battle between buyers and sellers. Before entering the market, it is very important to know who is winning, who has the stronger hand, because what we need to do is we need to take the strong side. Before entering the market and going into this battle, joining the buyers and sellers in their battle, it is very important to join the stronger side. And this is the information that is provided to us through the color of the candle. Now, the color is very important, but what is also important is the range of the candle, the size of the candle. The size of the body, which is the difference between the open and the close, is very important because it tells me how strong are the winners. A small body candle doesn't reveal strength, whereas a large body candle, a candle with a big range, a big difference between the open and the close, reveals strong control by either side. And this is even more important to me as a trader. Okay, it reveals momentum. All right? So the bigger the candle, the clearer is the message for the analyst. And the third important part is the range of the wicks. So as you can see here, this is a small body candle. It tells me that the sellers are winning, but it doesn't tell me that they are very strong compared to the previous candle. Now, the length of the shadows is very important also because it reveals to me the support and the resistance, the points, the price levels where we had a rejection. So if we look at this candle, we notice that when prices moved and reached this high, the sellers went in and managed to defeat the buyers, pushing the price down all the way up to here where it closed. So basically, this high here is the highest level reached. It is the rejection level. And this is very important because tops and bottoms are revealed through the wicks of the candles. Now, these candles, they form in different patterns. We have small candles, we have big candles, we have candles that look like this, doji candlesticks. Now, if you look at this candle here, we notice that the price started at one point, went up, came down, pulled back up, and closed at the same level. What information is this candle providing me? Do we have a clear winner? No. It's like a football game between Barcelona and Real Madrid, where Barca scored one goal, and then Real pushed, scored another goal, and then retreated, and the game ended 1-1. Can you guess who's going to win the next game? We have no clue. Because this candle, basically, it's a neutral candle. It reveals indecision. We had no clear winner in this battle. Now, any bias about the future price movement has to be made based on the prior trend. But even so, me personally, I don't recommend using these kinds of candles at all. When I see a doji candle, for me, this candle is neutral. It doesn't give me any valuable information at all. Now, this doji forms in many different shapes. We have the classic doji that looks like a small plus sign, small wicks. We have the long-legged doji with a long upper and lower wicks or shadows. And we have the dragonfly doji, which looks like the dragonfly that flies over the ponds and the lakes. And then we have also the gravestone doji that looks like a gravestone. Now, no matter the shape of the doji and the style and the name, for me, they are useless. What we like in technical analysis, as I told you, are clear signals. And clear signals are given through big body candlesticks. And the patterns that we like are the bullish and bearish engulfing, for example. Now, the bearish engulfing pattern forms after an upward price movement where we had clear control by the buyers who managed to push the price higher and higher and higher. And after clear control by the buyers, we see a big body red candle covering the last big green candle. So this green candle reveals strong control by the buyers. And after this control, we can notice that buyers were defeated flawlessly by the sellers who managed to push the price all the way down, reversing all the control and the strength by the buyers in the previous candle. Now, if you look at this two-candle pattern known as the bearish engulfing pattern, can you guess or have a bias about the next price movement, whether it's going to be downward or upward? Well, in technical analysis, there is nothing guaranteed, like anything in life. Okay? It's a game of probabilities. But most of the time, when the bearish engulfing pattern appear, we will witness downward price movement. Opposite to the bearish engulfing, we have the bullish engulfing, showing a shift in sentiment from bearish to bullish price action. Notice after the clear control by the sellers, the appearance of this big body green candle reveals to us that the sellers ran out of steam, and the new buyers who came in managed to overcome the control of the sellers in the previous candle. And of course, after a bullish engulfing pattern, which is a lovely price pattern, most of the time, 75% of the time, we will witness upward price movement. There is another pattern which I like, which is the morning and evening star. It is very similar to the bullish and bearish engulfing in the sense that it is formed by big body candles, except this one is a three-pattern candle. The first candle is a big green candle showing strong control by the buyers, followed by a small body candle showing indecision. And the color of the candle is not important. It can be green, it can be red. What matters is that it is a very small candle showing lack of momentum and indecision. between buyers and sellers, to be confirmed by a third candle, which will be a big body red candle. So these three candles together form the evening star. Okay, strong control by the buyers, indecision, and then strong control by the sellers. And of course, now you can guess what happens next. It's a downward price movement. Opposite to the evening star, we have the morning star, which is formed by a big red candle, small candle showing indecision, and then a big green candle reversing the action and the control of the sellers in the reference candle, which is the big red one. Now, there are plenty of Japanese reversal candlestick patterns, a lot, okay? They take different shapes. We have the dark cloud and the piercing patterns, which are similar to the bullish and bearish engulfing, except they do not engulf all the previous candle. They engulf more than 50% of its body. So it's less reliable than the bullish and bearish engulfing. We have the evening star, the morning star, we have the bearish harami and the bullish harami, and then we have the bearish engulfing, the bullish engulfing, we have the bearish and bullish reversals, and plenty more. When I studied technical analysis, I read a whole book about Japanese candlesticks. But you are lucky, you don't have to do that anymore, because analysts and authors like to complicate things to show you that they know a lot. Well, in essence, I summarized to you the reversal candles in 15 minutes. You don't need to read a book. All you need to focus on are big body candles reversing big body candles in the opposite direction. We don't care about the names, whether it is engulfing, harami, marubuzo, or whatever name there is. It can be named Mickey Mouse and Minnie Mouse for all we care. Now, Japanese candlesticks are very important. Yes, just a summary about the importance of Japanese candlesticks. They are the most popular way to analyze charts is through Japanese candlesticks, okay? It is important because it shows all the important price elements, open, high, low, and close. And they are widely used by analysts because these patterns will reveal to us shift in sentiment, shift in sentiment, and shift in basically the behavior of the traders. They are used to detect market tops and market bottoms. And I know that most of the speculators, what they like to do the most is buy the bottom and sell the top. And this will help us in this endeavor. Now, because the analysis of candlestick patterns is very complicated, it's not easy, we worked with our developers. We taught them all the reliable reversal candle patterns, and we taught them how to automate an indicator that can scan the market and spot important reversal candlestick patterns, such as the bearish and bullish engulfing, the bullish and bearish harami, the dark cloud, the long days, the evening and morning stars, the hanging man, the hammer, and a lot more reversal candlestick patterns. And this indicator looks something like this. So this is an indicator that you can add to your MT4 and MT5 platform. It analyzes the price chart, and it can reveal and outline reversal candles on multiple time frames. So it can analyze all the time frames of your choice. Look here, M15, H1, H4, day 1 weekly, and then it can spot and highlight to you important reversal candles. Every pattern is highlighted, and it comes with a clear entry, stop, and 3 price targets. Also, a picture, an image of the pattern will be displayed, including all the information about this pattern. Now, this indicator is also adjustable. You can adjust it and add more filters, like overbought and oversold conditions. through the RSI and the moving averages for trends. And basically, the most important thing about this indicator is that it doesn't only analyze one security at a time on multiple time frames, it can scan through all your market watch, and it will reveal ready-to-trade reversal patterns. All you have to do is analyze these patterns and place your orders. Now, to learn more about this indicator, you can visit XM booth. And what I want to do now is to invite you all to our free 3-day workshop, which is going to start next month here in Abu Dhabi in Time Training Center on the 14th, 21st, and 28th of May. We will be having a 3-day workshop about technical analysis, where I will personally explain in depth all about price action and this amazing indicator. It's a practical session, so it's done during the weekdays and on Wednesdays, just to give us the chance to actually apply what we are learning on real market conditions. So if you are interested in attending, you can scan this barcode. You can also visit XM booth. I will be there to answer all your questions. Thank you very much for your attention. I hope you liked this presentation and hope to see you in the workshop. Thank you very much.